Hello and welcome again to the Noplex Stock Report, where another exciting day with the algorithm leading the way. Today we traded PROG, that's Progenity. I'm not even going to go into the company profile because that just takes away from the fact this is a technical algorithm that we've developed over 30 years. So how it works, you can watch the longer video that goes into the whole history of it. But as you may recall, we have a band system called the Mega Plus and the Mega Minus, the upper and lower bands. We weren't satisfied with Bollinger Bands or Donchian channels in the past or other techniques to cast a band. And so over the last 30 years, we've developed our own proprietary band system after a lot of tweaking and a lot of custom tailoring to get to the point where we thought it was more reflective to day trading and more informative. And then within that, we also have our other two proprietary indicators, which are, we just call them M1 and M2 because of the mega names, Mega 1 and Mega 2, the upper and lower, what we call cross oscillators, right? So we developed a real interesting kind of a quadraphonic, to take a word from stereos, oscillating system, because as price and volume change and as our Mega Plus and Mega Minus grow and expand, decline or increase, there's a lot of cross behavior, and we found a way through statistics over 30 years to calculate in our database these cross oscillators and where the stock is performing. So calculating it took forever, but then the real technique that we use is that we take the data of stocks that we've filtered down every night and see, hey, based on these cross oscillators and comparing it to past stocks who've had similar behavior within the Mega Plus and Mega Minus bands, meaning other stocks that had similar cross oscillating behaviors, how likely is a stock to be profitable tomorrow? And that's the whole thing that our monster program is doing every night, calculating what are the odds. So first it filters down 8,500 stocks, down to about 35, then maybe 20, and then I think the last filter gets it down to, it varies every day, but 10 to 15. And then we dig into our historical database. First of all, we calculate the cross oscillators, and then we go back through and look at a absolute treasure trove of past data to see who else had those specific scores on the M1, M2, Mega Plus, Mega Minus cross oscillating data in the database. And since it's a database, we have a lot of room in there, so we've got all sorts of calculations at every price and volume level. So to find two stocks that are the same, it's kind of like finding two snowflakes that are the same, or two human beings with the same fingerprint, which obviously there aren't, but that's how challenging it is for our computer to plow through all this data for the last 30 years. And after it does its job, it gives us the stock to buy tomorrow. And this one we got in at right away in the morning, and guess what? 60 seconds later, because the algorithm is so successful, we were only in the market for a minute. We got in and out and made 3.77% in 1 minute of trading. Now you say, well, why 1 minute? Because the system is pegged to find the stock that's going to jump tomorrow. And boy, if you can make 3.77% every day of your trading life, do the math on that. A lot of folks, as I've said before, would be happy to have 3.7% over a year. And a lot of people will chase a lot of different investments to try to achieve that and be happy with it. You don't like that? How about 3.7 in 6 months? That'd be great. Guess what? We're not even doing it in a week. We're not even doing it in one trading day. We do it in 60 seconds of trading because the algorithm and the database are so pinpointed that when they find the stock, it's a buy, and it's going to behave probably statistically. The facts say statistically it'll probably behave like the other ones in the past. And it might be a stock from who knows when, 20 years ago, 10 years ago, 5 years ago, or there might have been, just throw out a number, 19 stocks that had similar scores in all those measurements. And to find two that have the same cross-oscillating scores, that's phenomenal. But that's what a computer does best, and that's why we leave it to the computer rather than to our own emotions to trade. We don't want to do that. We want to let the computer tell us when to buy and make our money. And as we say, move in, get out, and move on. Less risk that way and more reward. Join us at Noplex Stock Report, where there's nothing complex about it. That's why we call it Noplex, Noplex, stockreport.com. Thanks for listening.